So the top crypto exchange should give you more or less these options. Now we'll look at how to go ahead and trade cryptocurrency and use this type of trading screen. So what I'll do is leave links to videos below for all the platforms that I use and how to use them. So how to get started, all of the different options and tools and everything really in depth. I'll leave those videos below. For here, we'll just get started with trading cryptocurrency live and some of the options. So the first thing is, if you have an account on a cryptocurrency exchange, you need to get money onto the exchange. So there's really two options. The one is card and the other one is a bank transfer. This is going to change depending on which country that you're in. If you go to buy crypto, up at the top left of most crypto exchanges, they're all going to be laid out the same, is you have an option to get fiat currency in and buy a crypto. So your fiat currency would be here. If you spend that fiat, you'll get to choose between buying some cryptos that you might want to hold. That's great, simple, easy. You pay with a card. It's going to be around 1 to 3% in fees, which is very high. It's easy, but it's very high fees. What a lot of people may do is use a specific on-ramp in their country to get a bank transfer in. Now, some crypto exchanges are fantastic for on-ramps. Some countries restrict this, so you're just going to have to work out in your country what the best options are. Some people use another on-ramp exchange to get money in, and then transfer the money over to another crypto exchange which has much lower fees. So you put money in, you exchange it for Tether, USDT or USDC, which are stable coins, transfer the stable coins over, trade on the lower cost exchange. There's many different options here. It's up to the individual and what works in your country. So this is an option, and if you're using this option, just directly buy the crypto that you want to hold. The more professional way is to use the spot trading market. So we'll go to trade here, spot trading, and then BTC. And what a lot of people do is trade BTC against the stable coin. If your country allows you to put fiat currency on your exchange, go to the fiat currency market and trade directly into a crypto. So as an example, Bybit allows for euro trading. So if you put euros onto Bybit, you just go to the asset you want to trade, so BTC. So for euro, you can put a bank transfer in of euros and then spend those euros to buy BTC in the euro BTC market. That's right there, and that's a fiat to crypto. If you don't have that option, a lot of people, especially if they've been in crypto a while and traded in and out of things, they will use stable coins. Stable coins are a crypto dollar, so dollar stable coin. So you'll have a stable coin here, and that's the money that you spend to buy a crypto. So we'll look at Bitcoin here against US dollar Tether. See the price changes a little bit. This is a much more mature market, and of course we're trading against dollars here and not euros. On any platform, you should be able to search for the crypto pairs that you want to trade. So if you type in BTC, you can see all of the crypto pairs and the ones with the most volume. BTC against Tether, BTC USDC, BTC Euro, and then BTC against some other assets, right? If you choose ETH, you should be able to see that here. So this is Ethereum against stablecoins, Euro, ETH BTC. So if you want to sell one to the other between ETH and BTC, just trade that pair. We will stick to BTC USDT. This is the trading information for the currency pair. So the price is this, and this is the change over 24 hours. And then you can just add favorites here as well. Down here we have the order screen, so any current orders or previous orders, any orders that are live and working, you can see them here. We'll go through charts later. What we want to look at is the order book and the order screen. So for right here, we know the order book now. And this is the price of Bitcoin. So what do we want to do? We want to buy or sell it. So you can see this, buy, sell. Choose the one that you want. Spot. Spot is the spot market, the cash market that we're trading in. Margin is where you can borrow money from the exchange and take leverage. Obviously too complex for right now, we'll leave that. So what we're going to do is choose a market order. A market order lets you choose the amount that you want to buy, but it doesn't let you choose the price that you're willing to pay. You're basically saying, I don't care about the price that I pay, I just want to get the order done. So we're going to choose an amount to spend. So we've got Tether, because this is the one that we're spending, and we're going to spend $11 to buy an amount of Bitcoin, and the price that we get, we don't know, whatever the best price is at the time. You can also change to order by quantity, so if you know exactly how much BTC that you want to buy, you can put that in. But you need to know how much USDT that is going to cost, right? And it's not going to be able to work it out because it doesn't know the exact price that it's getting for you. In any case, we'll just stick to order by value, and then we can buy an amount of BTC by pressing buy. Now remember, market order is going to trade immediately at the best price. So if we click the buy BTC button, it's going to check it. That's the order here, buy, right? Then we can go to trade history, and that is our purchase. BTC USDT, we had a buy order, it's filled. You can see we paid a little bit of trading fees there, so we got $10.96, and the filled price is this one. We didn't choose that, it was just what the price was trading at the time. So that's how to trade a market order and literally just buy crypto. That's absolutely fine, but it's like trading your money at the airport, right? You don't know what trade that you're getting. So the more professional way to do this is to use a limit order. A limit order lets us choose the price that we're willing to pay and the amount that we're willing to trade. So we can make our limits. This is the limit of what we want to trade at. So when we put a limit order in, I say 45,000. That's the limit price. That's the max price that I'm willing to pay. That is my limit. And the quantity, we want to trade at $15 here. That's the order value. Now it works out $15, 45,000 per BTC. We can trade this fraction of BTC. So we can put the limit order in here. We press buy BTC, checks the order for us, buy BTC. That's down here. Of course, it hasn't traded because our bid at 45,000 is below the market price at 45.99. So we can't trade. Where is our order? Well, it's down here on the order book, lower. The order is working. It's known as a working order because it hasn't traded, but the system, the platform, the exchange is saying, if the market price gets down to 45 and if there's a seller there, we'll trade your order at 45. We've got that instruction. So we're a buyer of Bitcoin. The order value, the price, and how much is filled, which is currently 0, right? So what we can do is actually change that. So we can change it here. So click, and then we want 45,880, something like that. And then we can press OK. Our limit order has now been changed, and that is our limit price. We have a much higher percentage chance of getting this done because we're pretty close to the price at this point. If we change again to something a little bit closer, like 918, we can do that, and we may get filled at this level. If the price comes down, you should see a dot near the price that your limit order is in at. And once it's traded, you will trade there. Now, a tip here is that using limit orders can get you better trades. You can see that the price moves around quite violently. And so using a limit order, by just seeing what the price is, going down the order book by like $5 or $10 or something, and putting your limit order in there a little bit lower, is just going to save you a tiny bit in each time that you trade. So you don't need to use a limit. The price moves around. If you're just a little bit lower, you might have to wait a little while, but the price might trade and get you a better price. So there's pros and cons to each, because if you put a price in that's too low, you may not change. But a limit order lets you make that decision. If you want to sell your crypto, we can use the exact same order types to sell out for any other currency. So the first thing is we need to know that we're selling a crypto, and we want to know the currency that we want to trade it into. So if you have Bitcoin and you want USDT, you need to trade that pair. If you're looking for Bitcoin and you want to trade it into euros or something, you have to trade that pair. So I'm going to trade USDT here, go to sell. So change it to sell. We're going to use a market order, and we're going to sell an amount of BTC. So you can put that in the amount that you want to sell and press sell. You can also go to a limit order. Now again, because you're selling, you can choose any price that you want. Now if I said that my limit price was 40,000 to sell an amount of BTC, right, like $15 worth, I'm going to trade immediately because my limit price is 40,000 and the price in the market is 45,900. This is basically a market order. So it's not, the limit has no relevance because your price is below. But what you can do obviously is place an order above. So if I want to sell this much at 50,000, I can sell BTC. I can confirm this. And of course, that will put a limit order for me. So if the price does get up there, I can sell that. So this is good to use if you want to sell some BTC, you just want to wait or whatever. You need the crypto on the exchange. It's tied up in the order, so you can't use it in any other way. But that limit order is there just waiting to be sold if the price gets there And just by my head, you can see cancel here, so just cancel out the order if you want to get rid of it. There is also a way to take losses or profits with automatic orders. So if you have an order in and you have an amount that the order is there, so you own some BTC, you can use what's known as trigger orders or conditional orders, otherwise known as TPSL. So you can see that here. If you press conditional, it's actually exactly the same order. What this does is puts in a trigger order for you to do something. So this is usually used with stop losses, which is where you sell your asset at a lower price than it's currently trading because you're selling at a loss to prevent further losses. So if the market's coming down and you're losing money, you can tell the system, I'm happy to lose 10%, but if it gets below that, I actually want to sell out and take a loss at 10% because I don't want to lose 20%. So this is usually used for more active trades. Investors really aren't going to use this because they're going to be just buying and dollar cost averaging over time. But for more active trading, you can set a trigger price. So let's say that I want to sell my Bitcoin, some amount of it. The trigger price is the price at which the order will be triggered into existence. So we're going to put that at 40,000. The order price is the actual order that is put in when this trigger is met. So we can put a market or a limit order in here. So we'll just do a market order, right? So you can't choose a price. What you're saying is when the price gets to 40,000, that's my trigger. Enter a market order to sell an amount of BTC, right? Whatever it is. The reason we can't use a limit order here is because, like I said, if we put a limit order in to sell with a limit of 40,000, it's going to trade immediately because the price is 46,000. What we're saying is sell as long as the price is above 40,000. So it's going to go, yeah, sweet, I can get 46,000, sell. But that's not a stop loss, that's just a sell order. What we're saying is if the price comes down, right, and we are making a loss, that's when we want to sell. So you can't use a limit order. You have to give the system a different instruction, which is a trigger. At 40,000, then sell my Bitcoin, sell BTC. Press that here, and that's going to be a working order for you. That will sell at a lower price than it currently is, and that is used as a stop loss. Like I said, that's for more active traders and people that are trading, shorter term. But it is, something that you can use if you want to. So just a quick bonus tip here for, people that want to gain exposure to crypto and trade crypto. Not really talking about day trading and that kind of tactical thing, which, to be honest, is extremely difficult. And really what we're doing with crypto is looking to take advantage of secular trends and get the best prices during cycles. So a kind of easy way to do this is to look at the Bitcoin price over the long term, know when we're in down cycles, in the cycles and the secular trend, and then just really be active during that time. So, what we can do here is go over and say, Bitcoin has these cycles very clearly, up and down, right? And we've seen that. So when we're in a down cycle, which is pretty clear, we're looking at, around a 30 to 40% drawdown is, a down move for BTC. It's pretty harsh. During bear markets, it has typically gone down 70% at the lows, but anything, down 30 or 40% from its high is typically somewhere where investors would get more active. So very simply, we can kind of chart these over time pretty easily, right? So you have these cycles that you can see on the longer term chart. So what you can do then is really be tactical and say, during the time when the price is down in a low cycle, that's when you're more active. And then you can go to, actually trade the asset. So what you do is, put in orders each week or each month. So you can do automatic buys and auto investing on a lot of these platforms where you can say, I put an amount of dollars or whatever on the platform, buy each week at this price. And it's going to do it automatically for you over a time. Or you can simply say, during this part of the cycle, right, I know that I'm going to be active buying, and so each week you just go and activate your buys there. And then past a certain amount, if you're in a big up cycle and you're nearing all-time highs, maybe you come back from your buys a little bit. So one thing that we can use is the longer term charts. We're using a week chart here, so this is very long term. It's showing kind of trends, and then you go down to trading and you're looking at charts on the 1 day. This is a period which each period is 1 day right now. And so you're looking at shorter term to trade, but then you're looking at trends. Because if you're investing in trends and looking to take advantage, you're really looking at these, right? People get too worried about short-term price movements, but you've got to look at where you are in comparison to where you've been, right? So for Bitcoin, and we know the thing has secular growth, if you're looking at a high, these are the highs, right? If you're trading underneath that, right, somewhere here, these are areas where investors are active. And it doesn't really get any more complex than that. So if you're a beginner and you're looking, how do I get involved with all this stuff? Maybe just start there, and you can get more active, and more professional as you go on. But seeing the longer term cycles and the trends over time, seem to have 4-year cycles of these trends, making sure we are, being active at the bottom of trends seems like a pretty good thing to do, and then you can go over to your crypto exchange. Now we'll come on to a short primer of technical analysis, because when looking at charts, there's some things you need to know. For example, what are candlesticks? What are the time horizons here? How can we make some drawings to make our lives easier? So if you don't know about technical analysis, there's 2 different types of charts, right? We have a line chart that we can look at, right? So we can actually change this to line. So we change this to line right here. And then we can change this to candles. Different information. Lines are great for longer term trends. This is the Bitcoin price. You can see it orange here. So it just gives us longer term trends of what the price is doing. For traders, what we're going to look at is candlesticks. And that's because candlesticks give us way more information than a price chart. Well, you can see the line there. A candlestick gives us 4 pieces of information, which is the opening price during that time frame, the low price during that time frame, the high price during that time frame, and then the closing price during that time frame. Open, close, low, high. That gives us way more information about what happened during that time period. The close is above the open, so we know that that's a green candlestick. Now, in some countries, they don't use the same colours, but in the Western countries, you'll mostly see green for a green up candlestick. Open, high, low, and close. The open is higher than the close. That's a down candle, and we colour that in red. Plot those over time, you have another type of chart. So we'll go over here. That's the candlestick chart. So these green periods, we know these are uptrends, where candles are opening and closing above each other, clearly an uptrend, right? So this is the price of Bitcoin over time, but we also know the price action during that time frame. Gives us a lot more info, and it's a lot more specific with exactly what price at what time. So of course, we have different time frames. This is on Binance here. 1 week, each candlestick is 1 week. 1 day, each candlestick is 1 day. Let's reset the chart. And 4 hour, 1 hour, 15 minute. If you're looking at 15 minutes, 1 hour charts, it's like this. There's no signal there. It's just noise. It looks like the price is moving a lot, but it's moving like 0.5%. If you're investing, you're looking at cycles, which is the real bulk of what we want to trade. Right? Day trading is tactical and it's difficult. But these cycles that happen over 4 years, very slow, and we can really take advantage of the meat of these big moves. You're looking at days, weeks in terms of the price chart. Really weeks, not even days, it's weeks, right? So clearly what we're seeing here on this chart is we are seeing that we're in a big uptrend here, right? Each of the weeks are seemingly going higher. So we're in an uptrend, we're recovering, price is going up, right? So let's look at candlesticks. This is bearish price action, what we say, because sellers are coming in and forcing the price down. This is bearish price action because we know that this is red. So it opened here and closed here. Sellers forced the price down. This is 3 candlesticks, could be 3 days, 3 hours. Bearish price action. Sellers are forcing the price down. This is bearish price action too, potentially. Because what it shows us is, even though the candle or the time period finished positive, what happened is buyers pushed the price up to the high, but in that same time frame, sellers pushed it all the way back down to almost make it a red candle. If they did that in this time period, maybe in the next period, that will continue. And so the next period could be a down candlestick. Why that's important is because if you're looking to trade over maybe a day or a week or months or even, on yearly candlesticks, those trends are maybe more predictable in that way. So you can see here that, you have some downtrend, right? You have some candlesticks where sellers are coming in, forcing the price lower. And so sellers seem to be overdoing buyers at this point, right? So it's just the information that gives us that, hey, if you're getting a lot of red candlesticks and they keep falling lower, maybe there's just a lot of sellers around and the price may go lower. And so you can try and predict this or try and say what type of trend we're in, right? You can see here that there are a lot of candlesticks where the price is being moved up. There was some consolidation here, but moving up, right? So that shows us that there's way more buyers than sellers in the market and they're pushing the price up. This is bearish price action. This is bullish price action. Open, close, bullish price action. Keep going higher, bullish price action. This is bullish potentially. Sellers forced it down. Buyers forced it all the way up to almost be a green candlestick. They may carry on in the next candlestick. And so that's how we look at price action. Now we're going to look at support and resistance. Support and resistance are the same thing. It's just a key price level where buyers and sellers seem to meet and the price gets rejected from that level, and so we know who's in charge. So you can see resistance here. It's where the price moves up, but it then gets rejected down, right? And it doesn't go past that level. So that price level is resistance. That shows that there are sellers at that price level, and there are too many sellers there that the buyers don't outnumber them. So it turns into a resistance price. This is showing us the fight between buyers and sellers, and buyers are not willing to pay above this price, and that's where the sellers win, and the price gets rejected away from that. Of course, these levels get broken all of the time. When you break through, that resistance level may now turn to support. The reason being that the sellers that were here are now gone. They disappeared because the buyers broke through. So those sellers have gone now, and so the buyers who pushed through and were willing to pay that price now turn that into support. This is literal, it's psychological. You can see it happening in charts. It's amazing how many times it kind of works out. But of course, that is a resistance level that now turns into support. So you get the support where the buyers are coming at this price and the sellers have moved up and are making resistance at a new level. These get broken all of the time, but we can use them as a pointer to where to put our trades and investments and where to be active. So back on the Bitcoin price chart, this is the long-term chart. How do you draw support and resistance? What you need to do is find an area where the price very clearly rejects away from. Major. That is a rejection. Price came up, big rejection down. This is a rejection, big rejection up. This is a rejection, this is a rejection, this is a rejection, this is a rejection as well. You can see that here. This is a rejection, right? So those are support and resistance levels. So what we can do is draw them on the chart. So we'll go up to here. Like I said, tutorials for TradingView and everything, the crypto exchanges, because you can do this on the exchanges as well, all down below, like full in-depth guides. We're going to go to horizontal ray. We're going to draw this on. We're going to keep drawing them. We're going to draw this. We're going to draw this. Right? So now we have some support and resistance levels. You can see that if you drew those before, you see when the price moved up, it got rejected from this level a couple of times. So it got up, rejection, rejection. It's amazing how that was the same price level as this. So this support turned into resistance. Now we broke through it. So now you'd be looking at new levels. You need to look at this being a support level, trading around here, and then obviously this is going to be a resistance. And this is major resistance because it's the previous all-time high. So that's how to draw it on. Key price levels, rejections, and it just gives you these really important areas where you know the price can get to and reject from. But importantly, if you're a buyer or a seller, you may know where to place your orders now.